Now on the flip side, you don't want to have a credit limit that's too high. Okay, so I've said above £1,000. Now, if you have what is called a revolving credit facility, which basically means an overdraft. If you have a single overdraft above £15,000, now let's face it, most people don't have that. But if you have a single account above £15,000 and your total credit balances are above £30,000, it may decrease your credit score. It may decrease it, okay? And then also sticking with credit accounts, so I'm talking specifically about loans, overdrafts, credit cards. If you have too many, now it doesn't define how many is too many, but you know, lots. Let's use some common sense here. If you have like 6, 7 different credit cards and loans, okay, that can negatively affect your credit score. You want to have some, but you don't want to have too many, because then that indicates that you're reliant on debt and credit to live and basically fund your day-to-day spending. So it's all about balance with these credit accounts. Late payments, we already touched on this, but this is number one, avoid them like the plague, okay? New credit account, try not to open a new credit account, so that's a new credit card, a new loan, balance transfer from one credit card to the other. You might think, oh, I'm just transferring my balance from one credit card to the other, I'm not actually taking out a new credit card, but you are actually taking out new credit, so avoid that. Even like utilities and mobile phone contracts, try and avoid those within 6 months of applying, okay, for a mortgage. So you don't want to have any recent new credit applications on your credit history, because this will negatively affect your score. And then lastly, this is a key one, when it comes to overdrafts and credit cards, it really is in your best interest to pay these off as much as you can, okay, month to month. So having 100% utilization, specifically of credit cards. So if you have a credit card and your limit is £1,000 and it's always at £1,000, you never pay it off, that's not a positive effect. It's actually a negative effect on your credit score, because it signals to lenders that you actually don't pay back your credit and your bills and you're reliant on debt, okay? So those are the main ones that I wanted to highlight. There might be lots of others, okay? There's lots of others. Put them in the comment section below, because I can't cover them all in this video, but those are some of the key ones that I've personally experienced and that I've seen through logging in to my personal credit accounts on Equifax, on Experian, on TransUnion, and seeing how they break down these components. Really important also, guys, hey, my goal is to get as many people investing this year as possible, so I've created some free resources and a link in the description of this video below that you can download completely for free to get you started on your property investing journey. I've put together a property investing calculator specifically for all the viewers of this channel for free. You just enter a few basic numbers and it instantly calculates all of your costs, profits, and returns automatically to help you make the decision on whether to potentially invest or not. I've also created a free fundamentals of property fact sheet that gives you all of the basics and key information that you need to know when buying a property. And there's links with discounts on tax advice and tax return services, which are a key part of being a property investor. I hope you enjoy these free resources. Enjoy, and back to the video. Check your credit score. I'd be checking it. You know, if you're looking to apply, if you're looking to buy a property, start looking at months ahead, okay, of actually going out to valuations and starting to talk to brokers, mortgage lenders, because it's better to see stuff on your credit file that's negative early. Try and fix it before you come to actually doing that full underwriting. And you know, you can do a good amount of repairing on your credit score in 3 to 6 months. So be looking at your credit score regularly, full stop, but especially if you're coming up to looking at properties. So guys, I hope that helped. You know, mortgages and lenders, it really is a subjective area of property. You might get accepted for a mortgage by one lender and rejected for a mortgage by another lender. You know, you are the same, you haven't changed. You're looking at the same information, the exact same information, but a lot of these lenders have different criteria, so do the best you can in terms of what you can control to put yourself in a good position. Guys, thanks as always for watching and supporting. Please like and subscribe. Send this video, send this channel to people that you think would benefit, because that's how these channels grow, and I'll see you on the next one. Thank you for watching. This year I'm making a video every month to answer any questions that you have for me. So whether you want to know whether you should invest in a limited company or in your own name, whether you should buy a flat or a house, what is the best way to get started in property, or who my barber is, just let me know. You can ask me in the comment section below, on Instagram, on TikTok, and I'll make a video dedicated to your questions. Like and subscribe, and thanks for watching.